Bitcoin emergency update. Over the next 7 days, we're likely to see Bitcoin surge towards 22,000. And today I'm going to go over the details of the technical reasons of why this is highly probable. So let's dive straight into Bitcoin. So we're going to cover something called pattern, price, momentum. If you're new to trading, I've actually just launched my 4 Secrets Crypto Trading Masterclass that shows you how to do what I'm about to show you with Bitcoin with high probability. This is in the description link below. You'll find it very, very valuable. But let's dive into Bitcoin. So a couple of things you want to first note is when we're looking at markets, first want to be aware that everything is fear and greed, human psychology playing out crowd psychology. And over here, we've got these overlapping waves. This is called a correction, and we should anticipate an impulsive wave. We've been saying that for months now, and that's what's happened. So what I want to look at now is what is this part of the market? What does it look like? Does it look impulsive or corrective? Well, these are non-overlapping waves. So that's an impulsive structure, right? So it's an impulse. So what normally occurs after an impulse? Well, it's normally a 3-wave correction. So we've had this massive surge over here. We want to identify what is it likely to be. And again, I'm using something called Elliott wave theory. It's Ralph Nelson Elliott figured this stuff out in the 1900, genius of his time. And it's just buying and selling behavior. Well, it looks like because this is a impulsive move up, it's unlikely to be the end of a correction. We refer to this as a wave A. It hasn't reached something called a minimum time for corrections based on this movement. So it also gives us an indication that this is not the end and that we're not going to get the break below. Now, again, we're just talking about probabilities, never certainties. This over here looks like a nice 3-wave move to the downside. It's called an irregular correction. So what should we anticipate next? Well, there's likely going to be some type of move to the upside. And one of the other reasons is we use something called a momentum indicator. So if you look at the bottom of the screen, you see a blue and a red line. Every time the blue line goes over the red, you'll see that Bitcoin has reacted positively. Blue line over the red, reacted positively. Blue line over the red, positively. And even with these corrections over here, blue line over the red, Bitcoin's always tends to react quite nicely with this momentum indicator. This last one, massive surge. So where is the momentum indicator right now? Well, it looks like the blue is going to go over the red soon, over the next couple of days. We've had this initial move up already. So what's likely to occur? So now we're going to drop down to a lower degree time frame. So we're looking at on a daily chart right now. And again, what I'm doing today is relatively advanced. But if you like the sound of being able to see what's likely to happen next, check out the masterclass because it will blow you away on how accurate you can be when you're using the 4 secrets together. One of them is powerful, but 4 together gives you something called a confluence of events. So we're going to now dive into an hourly chart. I'm going to keep it in the bottom right-hand corner. It's the same data, but what I really want to focus on is this last part of the movement that's in red. Right, I've drawn it out in red. What do you see? Now, this is quite intricate. Now, it doesn't mean it's guaranteed to play out like this, but it's highly probable, and we could look to trade this in a particular way that gives us high probability. So what do you see with this particular move? Is it a corrective structure or is it overlapping? So just so you're clear, corrective is when the market is overlapping. So the former waves are overlapping into each other. And then an impulse is when they are not overlapping into each other. Right? So that's what we're referring to. So which one of the two is it? Does it look like this one or does it look like this one? And this gives us a big clue of what's likely to occur next. And then we can trade this with a low capital exposure, tight risk management. And even if we're wrong, we can still make a profit. And if we're right, we can make big profits. And I'm going to show you how you'll do the thinking. It's called double think, where you think you are correct and wrong at the same time. So you can preserve your capital, but also ride the trends if and when they take off. So it's this one. But hopefully you got that, because look, this wave over here does not overlap into this structure over here. So when we see that, what tends to occur after a 5-wave structure is some type of 3-wave correction. Either we've had the 3-wave correction already, or what's more likely is that this is the first leg, getting a second leg, we're probably going to get a third leg. One of the reasons for that is there's something called Fibonacci retracements, and it's really, really powerful. One of the most powerful things I've ever come across when it comes to trading. The markets respond to retracements really, really well, but by itself, it's good. But when you combine it with the other three secrets, because Fibonacci ratios is one of them, I'll give that one away. And then you have something called a confluence of events. So because this 50% minimum retracement has not been reached, is likely, not guaranteed, but likely we're going to get one more leg to the downside. So how would we use this information? Well, it depends on what your trading strategy is. If you're trading futures contracts or CFDs, contract for differences, then you can go long on this and you want to have your own trade strategy. But the way I would do the capital preservation risk management is the following. So what I'm looking for is one more leg to the downside, right? Will it occur? I don't know. You don't know. No one knows, right? We don't have control over that. But if it does, I've got an alert that will alert me we've got this next leg down. Now look for long trade setups. And then what I'm going to do is you have to assume you're right and wrong at the same time. So what I ask myself is, what's the minimum that's likely to occur even if we're wrong? And normally the minimum is whatever this move is here, this initial move to the upside, would normally mirror. So what we could do is we could take profits over here, become risk-free, and then move the rest of our position to entry point, that's called being risk-free, and then give the market lots of space to maneuver. And then what's likely to occur is, I'm just going to show it to you like this so you can really see it. Sometimes when you zoom too close in, it's not clear to see. We're likely to see some type of 5-wave move that may look something like this. Similar to what we saw over here. Over here. 1, 2, 3, 4, 5. A, B, C, potential. We've got this initial 5-wave impulse, but that's just of the first leg. We're waiting for a correction. If it occurs, it'll be a nice long opportunity, lasting 2, 3, 4, maybe 5, 6, 7 days, and being on high alert if it tests the 22,000 range. Now, what I'm going to finish on today is, what is this likely to be if it unfolds like this? So this is double think. This is one of the things that makes trading incredibly difficult, is the paradox of you got to be prepared to be right and wrong at the same time. It's like a golfer playing a putt, and he has the visualization that the ball's going to go in, but he also has to prepare that the ball might not go in, so the ball doesn't go too far from the hole if he misses. And that's what we're doing over here. It's one of the best strategies when you're trading, so you can have proper capital preservation. So if it plays out like this, just want to be on high alert that we've had this move down. We've had what looks like to be, hasn't happened yet, but if it does happen like this, a first impulsive move down, a corrective move down, and then an impulsive move up. If this occurs like this potentially might be an A, B, C correction. We'll then need to just reconsider the price, the time, the momentum position, and to see what Bitcoin is looking like. But the market is always speaking to us and telling us what the crowd is thinking and feeling. And if we can just go with the edge. So the real way you want to be thinking about this, depending on your strategy, right, if you're trading Bitcoin versus just hodling Bitcoin long term, is crowd psychology. This is applied crowd psychology, and it's based on fear and greed. And as the price unfolds, it's telling us how the mass herd is thinking, and we can jump on the edge, have the edge in our favor, and ride those trends. So it's a great saying, the trend is your friend. Ride it until its end, until it reaches its bend. So the initial trend is likely to take off to the upside, and the micro trend, which we drew in red down here, is on the upside also. So we want to be on high alert. Now, keep in mind, what I covered today is very advanced. So we went into a lot of detail today. So if it kind of fried your brain a little bit, that's okay, because everything is difficult before it's easy. But it's one of the reasons I've created the 4 Secrets Crypto Trading Masterclass that just shows you how to combine these 4 elements to your trade plan so you can become the casino where you win more consistently. So if you like today's video, like, subscribe, hit the bell notification. We will keep a very, very close eye on Bitcoin. I'm going to finish with a quote from my book. We'll go with chapter 2. I've read them so many times, I know it from the top of my head. Is Warren Buffett. He says, rule number 1, never lose money. And rule number 2 is never forget rule number 1. Now, the caveat is when you're trading, taking a loss is just the cost of doing business when it comes to the business of trading. However, using this concept called double think, where you can prepare to be right and wrong at the same time and have tight money management and elite money management, you can become risk-free, make a small profit even if you're wrong, and that allows you to give the market lots of space for the trend to unfold. So like, subscribe, hit the bell notification, check out the masterclass, and I'll see you on the other side.